Hello and welcome, all Skip the Dishes couriers. My name is Lisa Gittens. I am a senior tax professional with H&R Block Canada. And this evening we're going to provide you with some general information required to prepare your 2019 taxes. As we're going through, we will be covering the information that you need to prepare before you file, how to file the return, and what steps to take after you filed. You're welcome to submit the questions throughout the presentation, and we will be answering your questions at the end. So to get started this evening, I'll tell you a little bit about H&R Block. We are Canada's largest retail tax preparation company. We currently have about 1,100 offices across Canada, and our tax professionals are trained, receiving up to 60 hours of tax training before they're starting your returns. We do offer year-round support for our clients. So there's an H&R Block office in every community on your neighborhood corner. We're also available through do-it-yourself software, so you can prepare the returns yourself, and we have online tax expert that's available for you to submit your documents and have a Block employee prepare the tax return for you. Now, specific to Skip the Dishes, this year we've offered exclusive flat rate pricing just for our couriers on the Skip network. These rates are not available to the general public. We do offer significant early bird savings, which means if you're coming in early in the tax season, you are going to benefit right away. Now know that each return that we prepare for our couriers is going to take about 1.5 to 2 hours to complete. This is a small business return, and if you're visiting the retail office, we recommend that you speak with a senior tax professional. Speaking about that early bird pricing, it's falling right now within January 1st to March 31st. Walking into our retail office, your price will be a flat fee of $149.99. And that's an approximate savings of $165. If you're waiting to get all of your documents together and you're filing between April 1st and April 14th, that's our mid-season time, and the price will be $199.99. That's still a savings of $115 to you. After April 14th, it's late in the season, it's also crunch time in the season, and the fee is at $249.99. It's still a savings of $65. Now these savings, these rates are set in place as H&R Block partners with Skip. Of your vehicle, what records you should keep for the income and for the expenses, So this evening, what we're going to be discussing is how to report your income, what you can and cannot claim, your vehicle operating costs and what that entails, the cost of your vehicle, keeping records, what to keep and how to keep them. Income tax installment payments, how does that impact you? What to do if you're audited, how H&R Block can help you from beginning to end, and we do ask that you save all of your questions until the end of the presentation. Now, when we're speaking about how to report your income, generally in Canada, when you work for an employer, you're going to receive a T4 slip. As a Skip the Dishes courier, you are an independent contractor. This means no income tax is withheld from your earnings. Therefore, no T4 slip will be issued to you at the end of the year. You are required to track your income, the fees that you are earning throughout the year. You can track those in a logbook or through your smartphone. And when it comes to filing the income tax return, the income that you have collected is reported on the form T2125. It is a statement of business or professional activities. This form is about 6 pages. One of the important things is that you are now the business. So when you're reporting on this form for business name, that is your first and last name. The product that you provide is delivery or courier services. You're also going to indicate on this form when you started the business. So if you started in 2019, you're going to indicate the day and the month. It will ask if you ended the business in 2019. If you worked right through till December 31st, that will be your end date. If you started this on a temporary basis, say only did it during the summer in 2019, those will be the 3 months that you indicate on this form. You report it as business income and you are the sole proprietor. Now, once you report your income, the fees that you've earned on the T2125, you may be wondering, how can you track and how will you know what those fees are? We do have a self-assessment tax system in Canada. So the onus is on you to be tracking your income, whether you're self-employed or an employee. An employee would have their pay slips. As a contractor, have a logbook. Track the trips that you're making and the payments that you're receiving. You also have technology. We have smartphones, we have laptops, home computers. Track in the calendar there the days that you work and the amounts that you earn. Okay? Skip the Dishes couriers will receive a summary of earnings. And this summary of earnings should be coming to you by the end of February of this year. That summary will show the delivery fees that have been paid to you, any other fees or transactions that have been added to your income, total fees paid, and the statement will also show if you have earned any tips with Skip the Dishes. Now, these will be tips that the customer has paid when they ordered the service. If you are receiving cash tips upon delivery, the onus is on you to track those cash tips. And the tips is considered taxable income. So you want to be tracking it and you want to be reporting it on your income tax return. Again, Skip the Dishes will track the tips only if the customer has paid at the time that they purchased the service. Any cash tips given to you are at your discretion to record. You have to provide proof to Revenue Canada of the tips that you have recorded on the income tax return. When we look at the income, the next question is, what are the expenses that I can claim? What expenses did you incur in order to earn that income? So one of the first things that we think about is when you signed up to be a courier. There's typically a $20 fee that is paid up front, and that fee is deducted on the T2125 as a business. There's a section for business tax, subscriptions, and membership fees. So that $20, they will provide you with the receipt when you pay it, keep the receipt, and claim the full $20. The other thing that's required for you to pay up front is for your thermal bag. The cost of that is approximately $60. Again, they should provide you with a receipt of that fee, and you want to keep the receipt and claim the full $60 as a supply used indirectly to provide your services. Cell phones. Now, with your cell phone, the cost of the airtime and the data, that's going to be the expense related for you as a courier. If that cell phone is being used for personal as well as your business use, you will have to prorate the cost. What do I mean by prorate? So we have 365 days in the year. If you worked for 30 of those 365 days, we're going to calculate the percentage. How much is the 30 of the 365 days? And that percentage is the amount of the data that you can claim. So we're looking at the airtime and the data. A percentage of that is claimed as a business expense. The onus is on you to track the personal calls. And I'm stressing here the proration because if you're working at another job and you're doing skip the dishes on a part-time basis, you definitely want to be tracking how many days in the year am I working with skip, and use that proration, the days versus the total number of days in the year, to give you a percentage of how much of the cell phone bill you can claim. The cost of the cell phone is generally not a deductible expense as a courier. If you purchase that cell phone specifically to use for skip the dishes and the cost of the cell phone is more than $500, you do not get to write off the entire cost. You will again be limited to a percentage of the total cost deducted over a period of years. And I'll explain that more when we talk about the capital cost. When we're talking about, so we've looked at the signage, we've looked at your thermal bag, and we've looked at your cell phone. Those are going to be your three biggest expenses. Again, make sure you're keeping your receipts, make sure you're tracking how many days you work, and the fees that you're earning for each trip. You're driving to do the delivery, so you want to be tracking your vehicle cost as well. This is going to be your next biggest expense. We will discuss that a little bit more in details. You can also claim your tax preparation fees. Now, remember I mentioned there's the T2125 that you're filling out, which is a statement of business and professional activities. Because you are reporting that self-employment income, any fee that you're paying to have your taxes prepared in 2020 will now be deductible on your 2020 tax return. So we are preparing a return for 2019. You're going to keep this receipt and deduct it when you file your 2020 taxes because you're reporting self-employed income. And here we are with the vehicle operating costs. So, the business use percentage of operating your vehicle. That's the first thing that you have to calculate. This will require you to keep a detailed logbook. You know when you started the business of Skip the Dishes. On that day that you make the first trip, you take the odometer reading on your vehicle. On the last day in the year, that when you take your last trip, you record the odometer reading on that day. For some of you, it's going to be December 31st. For others who've only done it on a temporary day, it's that day that you do the last trip. That will give you the total kilometers that you have driven. And then you're going to look at how many trips you did for Skip the Dishes in the year. So this percentage of operating your vehicle is based on the number of days that you drove it for business, the kilometers you drove in those days, divided by the total kilometers that you drove with the vehicle for the year. Throughout the year, you're keeping track of your gas receipts, your oil changes, if you paid to have the winter tires installed, wiper blades, washer fluid, all of your vehicle operating costs. If you're tinting windows or purchasing seat covers or putting fragrance in the vehicle because you're a delivery and you're driving to make it more comfortable, those are personal expenses, the tinting, the seat covers, and so on. But the operational expenses, the gas, changing the tires, the washer fluid, the wiper blades, keep your receipts, not just your credit card statements, the actual receipt that shows the name of the company, the date, the item, if there was any tax paid, and the total amount. Your insurance. So you're keeping your insurance costs for the year. Again, it's going to be prorated. You will get a percentage of the insurance paid based on the kilometers that you drove for business. License and registration. If you paid license and registration in 2019, the fee for 2019 is deducted on that return. If you paid for more than 1 year at a time, only the fee for 2019 will be deducted on that return. We talked about maintenance and repairs, so things like the oil change. If there were any fender benders and you paid for the cost, keep those receipts. Again, a percentage of that repair will be deductible as a business expense. Interest costs if you have a car loan. So you have this vehicle, you're financing it, and on the principal, there's a monthly interest cost. Not the principal that you're paying, but the interest that you're paying while you are a courier is a deductible business expense. Again, it is your responsibility to keep the receipts. We were talking a little bit about the maintenance and repairs. We're looking specifically at those repairs that were incurred while you were using your vehicle on business. Some of those expenses while you were on business could be business parking. So if there is no home parking and you had to use a parking meter downtown, you want to be keeping those ticket stubs because those are deductible on your return. And again, you're going to enter those amounts on the T2125. Please keep in mind, repairs that were incurred while you were using your vehicle for personal reasons are not deductible at all. So that fender bender, if it occurred while you were on your way to the cottage or going to the grocery store, that is not deductible. But if there was a fender bender while you were doing a delivery or during a shift that you were scheduled to work, that is the repair that you will deduct on your income tax return. Staying with vehicles, we're going to talk a little bit about what are your capital expenses. Now, a capital expense is an expense that gives lasting benefits or advantage. It maintains or improves an asset. Your vehicle, the actual cost of your vehicle, is a capital expense. This means you are not able to write off the cost of that vehicle all at once in 1 year. If you purchased a vehicle in 2019 and you started as a skip the dishes courier, we are going to enter in your return the cost of the vehicle, and every year while you are a courier, you are going to claim CCA, depreciation, which means 10% of that vehicle cost is deducted as an expense until the total amount that you paid is used up. A percentage of the vehicle cost is deductible as an expense if you own it, but not the entire cost that you paid for the vehicle in 2019. Now, things that you cannot claim. So we've been very clear with your vehicle expenses. We've looked at the thermal bag, the cost for signing up. Things that you cannot claim would be any clothing. If you purchase specific clothing for because keep you more comfortable while you're in the car, that clothing is not a deductible expense because it has a personal component. Designer sunglasses. So you're driving, it may be difficult with the glare on the road, that is still a personal expense. Haircuts and manicures. Yes, you need to be presentable when you're showing up at the door, but again, that is seen as a personal expense. These are things that have benefit to you even when you are not on the job. Any meals that you eat while you're on the job. If you're working an 8-hour shift, we understand that you're on the road, you're going to stop, you're going to have a coffee, you're going to have that quick bagel, but those meals are not deductible. That's, again, your personal expense. Any fancy ornaments or fixtures, we talked about those seat covers or the air fresheners in the car, again, personal expense and not deductible. We know that you spend a lot of time on the road. So any fines or traffic tickets cannot be claimed as a business expense on your tax return. So at all costs, avoid. your fines and traffic tickets. We're still talking a little bit about the vehicle. And I mentioned to you, in order to track those costs, because we have to do the proration, you need a logbook. If this is the very first year for you as a Skip the Dishes courier, it is critical that you have a detailed logbook which shows, as I said, the odometer at the beginning of the year, the odometer at the end of the year, and the trips that you took throughout the year. So on January 2nd was your first delivery. You drove 10 kilometers. The second delivery, 3 kilometers. You want to track at the end of the day what were the kilometers you drove in that year. Recommend getting a notebook from the dollar store, but we have a lot of technology available. So write in your smartphone, in the calendar, track the kilometers that you drove that day for business. In the first year of operation, Revenue Canada requires that logbook. Without it, they will deny you any claim that you make for vehicle expenses. As we're tracking again with records, so you know you must have that detailed logbook, remember that any expenses that you have, not just a credit card statement, is acceptable for Revenue Canada. They must show a clear description of the goods and the services. So those gas station receipts, rather than having to keep them in a shoebox in the corner of the cupboard, take a photograph with your smartphone. Okay? Make sure that you can see clearly the location, the amount, and if there was any tax that you paid. And also, when you're walking into the gas station and you're filling up with gas and you're thinking, I want to get a snack or purchase some cigarettes or gum, something separate, get a separate receipt for that. Keep the gas, the oil, the windshield washer clearly on one receipt that you can use for business, and any personal snacking items on a second receipt. It will make it easier for you to separate when it comes to filling out your business expenses. Now, income tax installment payments. When you're self-employed, this will become very familiar to you. There's no tax withheld at source. No tax is being deducted from your income by your employer. And you will end up paying this tax when you file your income tax return. As a self-employed individual, you are subject to federal, provincial tax, and you are required to pay into the Canada Pension Plan based on your self-employed earnings. It's always a good recommendation to set aside about 20% of your earnings come tax time. Tax installments come in when you file for 2019. If you owe more than $3,000 and you've owed in the previous 2 years more than $3,000, Revenue Canada will send you a letter and invite you to start making installment payments. In fact, you are prepaying to save yourself a large bill in the future. They will invite you to make the installment payments. They will send you documentation to tell you what the amounts are you will pay and when you start paying them. If you have been paying installment payments prior, then when you file your income tax return, you're going to report the amount of installment payments made, and that's going to reduce your tax bill for 2019. 19. Now, we have discussed the income that you're going to report. We've discussed the expenses that you're going to claim. If you're thinking, well, this income was small, it's not a lot, why do I have to report it? I'm reminding you that all employment income earned is taxable in Canada. But did you know that by reporting this income on your income tax return, you could be entitled to receive additional benefits, like the Canada Workers Benefit? If Skip the Dishes Courier is your only employment income, and you've earned between $12,000 and $24,000 as a single individual, you could receive Canada Workers Benefit up to $1,300 back on your taxes. So by reporting this income, you're able to claim additional benefits and credits, and the Canada Workers Benefit is one of them. Claiming this benefit could also reduce any taxes that you would owe when you report your self-employment income. So an idea of how this credit works, say you're in Alberta and you have a working income of about $9,679. Now this could be solely what you've earned as a courier, or it could be a combination of your self-employment earnings and your employment. But this amount is reduced in Alberta. $1,453 is the amount of the credit that you would receive if your income is between $9,679 and $13,200. Anything that you earn in excess of $13,200 will reduce the Canada Workers Benefit that you receive. Across the rest of Canada, the maximum amount for Canada Workers Benefit as a single individual is $1,355. If your income is between $8,211 and $12,820, this benefit is available to you and can reduce your taxes. If you earn more than $12,820, right up to $24,000, anything over that $12,000 is going to reduce the Canada benefit that comes to you. There are additional benefits, additional amounts added to the Canada Workers Benefit if you are married, common law, or single and supporting a dependent who is 18 or under. You cannot claim the Canada's Workers Benefit if you were in school, whether full-time or part-time, while working as a courier. Canada's Workers Benefit is just one of the benefits for you filing your tax return. And it does require a separate schedule. It's a Schedule 6 to be calculated. Again, these are things that you can ask your H&R Block tax professional to assist you with. There's also information on our website and our blog to help you with the calculations. GST and HST. Now, Skip the Dishes collects the GST charged to the customer. You are providing a delivery service. It's a zero-rated service for GST purposes, And this simply means you do not collect GST on your delivery fee. You, as an individual, can still register for GST so that you can claim the GST that you paid on those gas, the oil, any vehicle repairs, even if there's the GST charged on any of your cell phone bill. You would have to register with the GST department. They send you a package which tells you how to report and when to report. And that is done separate from your income tax return. So to be clear, as a skip the dishes courier, you are not required to register for GST because you're not collecting it on your delivery service. If you choose to register, then you are filing to claim the tax credits for GST that you have paid, and that refund comes separate from your tax return. So that's the process of walking you through what documents to have, what schedules and forms to fill out on your income tax return, and submitting that to Revenue Canada. What happens after you have submitted that tax return to Revenue Canada? Typically, you will receive an assessment notice in the mail or online, which indicates they've received the return, they agree with the amounts. But what if you get an audit letter? Can be reviewed. Revenue Canada, on a yearly basis, will choose a specific industry or a specific area to audit or assess, which means they're simply asking you now, after you filed, to provide proof of the amounts that you've claimed. That's where those records that you've been keeping are so important. If you receive an assessment or an audit letter from Revenue Canada, it is important that you respond within 30 days of receiving that letter, and you simply provide to them by mail or online the receipts to verify the amounts claimed on your income tax return. You should see on your screen the notice of assessment that you receive from Revenue Canada. Again, once you filed your tax return, you've done your part, and you want to receive this notice of assessment. It is in fact a legal document in Canada. You may have to provide this if you want a car loan or look to purchase a house, because this notice of assessment is what says Revenue Canada received your tax return and they agree with the amounts reported. It is proof of your total income, taxable income, and net income earned in Canada. This notice of assessment will also show things like your RRSP deduction limits if you have tuition credits available. This is what you want to receive after you file. If, however, you're receiving a letter that's asking for documents, that's when you submit your receipts to verify the amounts on your return. Because H&R Block is here to help you, this is what we do. We file taxes and we speak to Revenue Canada. If you're using one of our professionals to file your tax return, know that we offer the Peace of Mind plan. This includes 3 years coverage on that tax return for audit assistance. That means we will look at the letters and tell you what documents to submit to Revenue Canada. Peace of mind when we prepare the return assures you a maximum refund guarantee that we have looked at your income, we have claimed all of your expenses, all of the benefits and credits that you are entitled to. It also guarantees you audit representation. So we speak directly to Revenue Canada, we provide the documentation, and any adjustments that are required to be made to your return, we will do on your behalf. We're always providing year-round support, and peace of mind means if we have made an error in preparing or calculating your return, then we will pay up to $3,000 of additional taxes if you are assessed by Revenue Canada. Purchasing the peace of mind is separate. It's over and above the pricing that we discussed at the beginning of the presentation. H&R Block, again, provides year-round service, and we are always here to help you. If you are ready to file, know that there is an office near you. We are in every neighborhood and community. You can call to book an appointment at a nearby office. You can drop in or drop off your documents at any office. And on our website, www.hrblock.ca, we post an office locator as well as a checklist so that you can make sure whether you're in the office or using our online software, you have all of your documents on hand to prepare an honest and accurate return. I want to thank you for your time here this evening, and now we are going to listen to you and answer your questions. So thank you for this question. Do bike carriers get to expense mileage? Now, if you are delivering on the bike, there is no odometer that you're tracking for the kilometers, but you are able to make a deduction based on the cost of the bike, the repairs that are done to the bike, the wear and tear. But there's no odometer on the bike to be tracking for the mileage. So what we look at there is the cost of the bike and any repairs, and again, it's prorated based on the personal and business use of that bike in the year. Thank you. Second question. I didn't know about all of the claims, and I didn't save gas receipts. Now, this is a really good question. You're not able, if you didn't know that you could claim for gas and oil. We're looking at 2019, and what you want to be able to do then is, if you don't have the receipts for the gas and oil, don't make the claim on the 2019 return, but start to save them for 2020. You cannot make those claims retroactively. In other words, go back and adjust a 2018 or 2017 without the receipts. So if you're going through that shoebox that was under the bed or that drawer that you had, and now you're seeing the gas receipts from your 2018 tax return, then clearly with the receipts we can make an adjustment to that return. Simply walk into an office and a tax professional would be happy to assist you. We discussed some of those things that you cannot claim. So meals is always a big one, and we're getting a question here, if you are having a shift that's 8 hours or more, then can I deduct my meals? And unfortunately, it goes back to no, those meals are a personal expense. If you are doing a delivery that is out of town, and this would be an unusual circumstance, but if I'm ordering food from Toronto and I'm in Niagara, because you're traveling outside of your city zone, if you stop to purchase a meal there, either on your way there or on your way back, that would be deductible. But within your city zone and within that 8-hour or 10-hour shift, those meals are not deductible. That is your personal expense. Thank you for that question. Wonderful question here. Is CAA or roadside assistance subscription, is that tax deductible? Yes. When we were discussing the T2125, I told you that there's a section there for business taxes, subscriptions, or memberships. That CAA or that Costco roadside assistance membership is deductible, but only in relation to the business income. So a percentage of what you paid will be deductible as a business expense. Keep your receipts. Now, in terms of the tax returns, we're getting a question, do I need to file 2 separate returns, one with my T4s and one with my self-employed income? And the answer to that is a definite no. When you file your personal income tax in Canada, so that's the tax return where you have the employment income, you clearly have your T4 in hand, you are going to add to that return the T2125, the Statement of Business and Professional Activities. And the 2 incomes will be combined to give you total income, net income, and taxable income for the year. When you walk into our office as a Skip the Dishes courier, whether you have 2 or 3 other T4s, that flat fee that we quoted at the beginning applies to your return. We're going to file one return reporting your employment income with the Statement of Business and Professional Activities, and you pay one flat fee. Another question about business registration costs. Now, we mentioned that when you register to be a Skip the Dishes courier, we know there's a $20 fee that is deductible. If you have registered your business name or you pay any other costs to be a courier in your community, that is 100% deductible on your tax return. Again, these are business expenses, so they're going to be noted on your T2125. Talking about the CCA, the capital cost allowance for your vehicle. Remember that we said your vehicle is a capital expense. So you purchased that vehicle, you paid the $20,000, and once you purchase that vehicle, you're using it for personal, but you're also using it for business. On your tax return, as a regular employee, there's no deduction for the vehicle. On the T2125, you're going to show the cost that you paid in the year to purchase the vehicle, and a percentage of the vehicle, it's 20% based on the class of the vehicle, is given to you as a business expense every year. So a percentage of what you paid to purchase the cost is a deductible business expense because you purchased the car outright. If you are financing that car with a loan, there's a principal that you're paying monthly and there's interest on that loan. The interest is deductible as a business expense on the tax return, not the principal payment that you're making monthly, but the interest on that is deductible on the tax return. Thank you for that question. Now, we talked about the odometer reading. So we have a client who's asking, if I started in September, do I need the odometer reading from that time or the beginning of the year? So it's always helpful to have the odometer reading at the beginning, January 1st and December 31st. That gives us the total usage that you've driven, the total kilometers you've driven with the car. You started as a courier on September 1st. So from that date, that's when you're using the car, you want to be tracking the business trips that you made from September 1st. If you didn't track the odometer from the beginning of the year and you're only tracking from September 1st, make sure you have tracked it from December 31st and the expenses within that period from September to December. That's what you're going to be able to claim on the tax return based on the kilometers driven for personal use and the kilometers driven for business. That is something that I would also specify that you sit down with your tax professional so that they work out the correct proration calculation for you. If you are using an Uber to pick up your car, so your vehicle is in the service shop, you're going to get an Uber ride to take you to the garage to pick up the vehicle that you are using for business. That Uber ride is not tax deductible. If you took the TTC, if you took a regular taxi, you're going to pick up your car from the garage, no part of that ride is deductible on your tax return because there is a personal component to that. When you get into your vehicle, when you leave the garage, if your first trip from the garage is to do a delivery, make sure you track those kilometers and the income earned right from there. Those will be deductible on the tax return. Great questions, keep them coming. Can I claim the vehicle I drive if I'm not the primary driver? Fantastic question, because we are sharing our vehicles with family members. You can claim that vehicle on the T2125. What you need to do is also keep that vehicle log. That is key. You're tracking the total kilometers that were driven with that vehicle in the year versus the kilometers that you use the vehicle for business. So 365 days in the year, you use the vehicle about 30 days for business purposes. Track the kilometers that you drove in those 30 years. All of the gas and oil receipts, the repairs that were done. Again, a percentage is given to you as a business expense based on when you were driving the vehicle for business. Thank you for that question. And here we go. What do we need to bring with us to H&R Block to file? first, bring yourself and your smile. Bring your income statement that you received from Skip the Dishes. Bring your records that you have kept of the kilometers that you have driven in the year, your records to show the fees that you received, your records of tips that you have earned, your cell phone bill, the receipt that you paid to Skip the Dishes, that $20 signing fee, the receipt for the thermal bag, the gas and oil. Now, when we talk about the gas and oil receipts and the license and the registration fees, that's a lot of paperwork. If you have those receipts just noted on a spreadsheet or written down in your phone, bring that into the tax professional and sit down with them. Remember that the actual receipt only is submitted to Revenue Canada if they request it. But having at least a copy on the phone of the gas receipt to show your tax professional that the $80 was only spent on gas and no part of that $80 was for personal items like cigarettes or chocolates or gum, will help them to be able to accurately enter the numbers in your return. We do have a checklist on our website, www.hrblock.ca. It's there that you can print it off and check off the items as you're walking into the office. Thank you for this question. This is perfect. Can I claim the tires that I bought privately? So if I bought it on Kijiji, for example, you can claim those tires because you purchased them, but you need to get a receipt from the seller or the vendor. So they may be used tires, but they're brand new to you. As long as you have a receipt for that purchase that clearly shows the name of the individual, what you purchased, and the amount paid, then you can claim that. Remember, a portion of those tires will be deductible as a business expense based on the time that you drove the vehicle for business. And great, this question is one that we hear over and over. Can I use credit card receipts if I don't have the gas receipts? Now, for your tracking purposes, using the credit card is great. Revenue Canada typically does not accept credit card statements as valid proof. On your credit card statement, it will show, for example, Costco, $100, but it doesn't provide the details of what you purchased. And so the receipt, the actual receipt attached to your credit card statement would be a better record keeping tool. Can I claim coin car wash or coin parking if I have no receipts? Now remember, we were talking about the maintenance and repairs or the expenses while you're on a business trip. So when you're doing that delivery, if you're downtown and you have to pay into the parking meter, there's usually a little stub that you're given. That stub is what you want to keep to show for the parking. Without a receipt, you do not want to make the claim for that business parking. The car wash, if the car wash is done at the start of that shift because you're going into an 8-hour shift, you're cleaning up the car so that you can use it for business, then you're getting a receipt and it's deductible. If it's the car wash because you're going up to the cottage, that is not deductible. No receipt is required. How is the interest on the car loan calculated? Now, that's going to depend on where you purchased the car, what your financing arrangements, the dealer, the type of car. What is important is that when you sign that finance agreement, it's going to show your monthly payments and it will show the monthly interest payment that is added in. So on that finance agreement, you'll see the details of how much you're paying in interest, and that is the amount that you're deducting. In terms of how the actual interest is calculated, that would depend on your financing company. Great questions, keep them coming. Can I claim my time spent for record keeping? Okay, so if I'm understanding this question correctly, the end of your shift, you're going home, you're adding up your gas receipts, you're tracking the kilometers and the trips that you've made, you're tracking down the tips that you've made, and at the end of your shift you've spent an hour. That is your time, but there's no deduction for that on the tax return. That's your personal time, your investment in the business. If, however, you're taking all of your receipts at the end of the year and taking them to a bookkeeper who's then going to compile all of the documents, prepare a financial statement and a tax return, then the bookkeeper's fees are tax deductible. But your time, when you're sitting at home compiling your records, that is personal and not a business expense. So I want to thank you because these have been brilliant questions. You've touched on everything that we've discussed. I would like to say that if you have any further questions, you are welcome to walk into your nearest H&R Block office. A tax professional is there, ready to assist you. Remember that as a self-employed individual, you have up until June 15th to file your income tax return. However, in preparing that return, if you should have a balance due or balance owing, that balance must be paid by April 30th. So now is the time to talk to your tax professional or your bookkeeper and know that the fees that you pay in 2020 will be deducted on your 2020 tax return. But H&R Block is just a click or a walk away from you. Thank you for this evening. Thank you for your time.